Hello all, welcome to Linear. So today we have come up with a unique video of high probability candlestick pattern. So there will be two more videos as similar to this. So we are going to discuss the first pattern in this video. So this video is based on the book by Encyclopedia of Candlestick Charts. It's the book by Thomas Bolkowski. Hope I'm pronouncing that right. It's book by Thomas Bolkowski. You can go and read that book to understand better candlesticks. He has explained in detail these patterns. So in this book, he has mentioned the accuracy rate of each pattern. So we are going to cover three patterns which have 75 to 80% of accuracy, more than 75% accuracy. Those patterns will cover in this series. This is just an educational video, a standard disclaimer. It's not an investment advice based on this pattern, or based on any discussions made in this video. If you do any investments or trading decisions, if you take any profits or loss encountered, will be your sole responsibility. You need to consult your financial advisors before taking any investment or trading decisions. What is this chart? This is Nifty's daily chart, which we are going to discuss and see the pattern in this chart. So let's concentrate on this area of late Jan 2021 and then the early Feb. So here you see that there are red candles one after another. There was a drop one after another, and with these red candles, the market had went downside. So just like these red candles, there is a red button down below. You can hit that button. That is a subscribe button. You can watch more such educational videos in future. Back to the topic. So yeah, on 1st of Feb 2021, you see this massive candle. So this candle is the candle on the day of budget announcement. After that, it went up straight away. So this massive candle is also called Nirmala Sitharaman candle because Nirmala Sitharaman gave the budget speech. After that, due to the good budget, the market went up. So that's what happened on that day. So we are discussing on this pattern. So let me give you some hint on this. So this is a 4 candlestick pattern. So these 4 candles forms this pattern. So yeah, I'll take a moment of pause. I'll give you a second or two to, like, you can just mention in the comment section which pattern is this and have you identified it correctly. We'll discuss that soon as well. So yeah, I'll give you a moment of pause.
3, 2, 1.
All right. So yeah, this pattern is called as bearish 3-line strike candlestick pattern, or also known as 3-line strike candlestick pattern. There is a bullish candlestick pattern as well, but that is a different and that has a lower success rate. So these are a couple of points on your screen which we are going to discuss today. How to identify this pattern? It's the first point. So yeah, so to identify this pattern, this has different 4 candles, as I said. First is red candle, second is red candle, third is red candle, and the fourth one candle is engulfing all previous 3 candles. As per the textbooks, it opens just below the close of the third candle, but we are also considering the case where it can gap up, or the body or open of that fourth candle is within the body of third candle. So yeah, I'm considering this as a valid case for 3-line strike. You can also call it as a Marubozu, or you can even call it as a bullish kicker. But the pattern here of 3-line strike takes more precedence because that indicates significant bullishness coming into the market or a reversal coming into the market. So what type of pattern is this? Second point. So this is bullish reversal pattern. Actually, the name implies bearish 3-line strike, but it is a bullish reversal pattern. As you can see, the 3 lines have been engulfed, hence the name hence the name bearish 3-line strike pattern. It is covering 3 lines, so that's why it's a bearish 3-line strike. That's the name. Okay, that could be confusing, but yeah, you will get used to such things when you are in the stock market. There could be confusing things, but yeah, we are there to help you to understand. So yeah, after this, you can see here that uptrend has continued. So this upside you can see clearly here. So yeah, as per the Thomas Bolkowski in his book, he has mentioned that this pattern has 83% of accuracy rate, meaning to say that when you find this pattern, there is 83% of chance that will go on the upside. So what he has done is he has uh, collected data. He has find these patterns on a lot of different instruments, a lot of different stocks, and then he has sampled that data, and then he has reached to the conclusion that there is a 83% success rate for this particular pattern. So two more videos as such are coming. So yeah, uh, going forward, for the third point, where to find this pattern. So this pattern is found at the significant bottom of the trend. So here you can see that there was a significant uptrend, and then it has went down, and in this downtrend at the bottom of the trend, you would find that pattern. So yeah, this is how you should look for the pattern. So look for the there should be a significant upside, then there should be a downside. At the bottom of that, you would find this pattern. So yeah, just remember that this does not always work. You have to combine with some indicators. We'll see that in a moment. Let's take a look up a couple of examples. So the another example that I have here is a Reliance Industry chart. Here you will also see there is a significant downtrend or a consolidation, and at the bottom of that you would see that there is this three-line strike candlestick pattern, and after that the uptrend has resumed. So as I said, you need to uh, like backtest it. You need to decide if you are using some indicators, you can combine it with this pattern, because none of the single pattern or none of the single system works alone in the market. There needs to be some confirmation to be taken. So that's why I have used. So the next point is regarding combining it with MACD. So I have combined with it with MACD. Here you can see that there was a positive crossover given by MACD on the day it made the fourth engulfing candle. So this is the fourth engulfing candle that it has made. On that day, there was a crossover. So at the end of the day, you would see that crossover, or on the next day, there is another signal that even though the candle was red here, the MACD histogram turned positive. So this indicates the potential reversal into the system. So after that, these are the some signals which you can also consider. Apart from that, you can also consider the support area as well, which can help you to identify the trend. So the next point is related to stop loss, or you could say risk reward. So that is very important in the trading. It should not be the case that you will uh, you will invest all your money in this stock when you find this pattern, and then you will lose everything if the stop loss is hit, or if you hold more than stop loss. So the stop loss should be just below the fourth candle. Okay, that should be your stop loss. If this candle is broken, the game over, then you are into that 24% or sorry 27% uh, case where the candlestick failed, right? So yeah, you need to ready for that as well. So even then, even your soap or hand washes covers 99.9% gems, but even after that, the COVID has hit the world and the market went down as well, right? So that could be the case as well. So you need to be ready for that as well. So make sure you put a proper stop loss in your systems and exit if the candle's low is broken. And you can target 1:2 or 1:3. So that should be a good risk to reward ratio for you. So that's how you can develop your system. So as I said, no system is a perfect in a trading world. It's always changing, and you need to be prepared for worst, and you need to have a plan B. You need to have exit strategy as well. So after that, we are going to see the screeners. So it's very difficult to screen all the stocks in the stock market. There may be 2,000, 4,000 stocks in the Indian indices, and scanning all them and looking for this pattern is quite tough. So I'm using here Chart Inc. site, where I get to see this screeners. So this is the condition of three-line strike that has been added here. When you go to the screener section, here there is a screener section under which you can search three-line strike pattern, where you will be able to find this pattern, and there would be a result down here. Right now there is no result because there is a Russia-Ukraine war going on, because of which none of the stock has this pattern. So what I did is, 1 week earlier, there were a couple of stocks on the weekly time frame. I have designed the same. I have just changed the parameters to weekly from the daily chart, and then I see these particular stocks coming on the screener. So let's check those. So here you can see Hisar Metal has that pattern. Here there is a fourth engulfing candle we can see here, and three consecutive downside, and then the fourth engulfing candle. And here Kothari Petro Products also has that pattern available here on this chart. Similarly, Century Extrusion, and then Nahar Polytechnic. So yeah, this is just to show you how to search them. And after that, you need to do your own study. You need to backtest it. Don't jump and go. Don't go and jump on these all shares and buy them, because that's not a good trading strategy, or you could say investment strategy for you. You need to validate the pattern, and you need to discuss with your financial advisor before taking such decisions. So that's all in this video. So yeah, we'll connect soon for the next video. So do make sure that you hit the like button, and also add the comments, ask your doubts in the comments. See you in next video. Thank you. Have a great day. Bye bye.